In this video, we are going to understand the difference between external structure and internal structure. This concept is extremely important because external structure tells you the main trend, and internal structure helps you understand what price is doing inside that trend. So far, we have already covered external structure in detail. The link to the full playlist is below. It is around 30 minutes, and it will help you a lot if you are serious about structure. So now, let's start simple and build this step by step. At first, we build the foundation using a simple line chart. Then, we will apply the same logic on real market charts. Here you can see the market is clearly bullish. Price is making higher highs and higher lows. This is external structure and is the main trend of the market. Let's pick this bullish wave and draw horizontal lines on the confirmed higher high and higher low. After this price retraced up to this higher low and then continued and broke this higher high to create new higher high. Remember, all these points are defining the external structure. So as long as price is respecting this higher low and continues to break higher highs, the external structure remains bullish. Now look closely at dark blue lines. You can see that internally, the market started retracing. Inside this retracement, price is making lower highs and lower lows. So, yes, the internal structure is bearish, even though the external structure is still bullish. This is very important to understand. Now, notice something critical. This internal bearish structure happened inside our two horizontal lines, meaning it stayed within the external structure range. Eventually, price taps into a zone near the external higher low, here somewhere, but it does not rake that higher low. After tapping into that area, internal structure starts shifting again. Now internally, price begins making higher highs and higher lows. In internal structure, momentum shift and break of structure also happened exactly the same way as we studied in external structure. What happened? Internal structure is shifted from bearish to bullish, so it is realigned with the major trend. And finally, price breaks the external higher high and continues its main bullish direction. Now, let's clarify this concept even more, and let's understand internal versus external structure when the market is in a bearish trend. Here you can clearly see the market is bearish. Price is making lower highs and lower lows, so the main trend is bearish. Focus on the second bearish leg. Draw a horizontal line on the confirmed lower high and confirmed lower low. These 2 points defining our external structure range. Now observe what happens next. Price retraced upward, and then finally, it dropped again and broke the lower horizontal line, the lower low. Now, here is something very important to understand. The market does not move in a straight line. Price will not just drop continuously in one direction. Inside this bearish trend, you can see price moving up with green swings, making higher highs and higher lows. So yes, internally, the market looks bullish. But remember, this bullish movement is internal structure only. Why? Because all of this price action is happening inside our two horizontal lines. As long as price remains within these boundaries, the main trend remains bearish. Now the question is, why does price retrace here? Price retraces because the market needs to test the external structure area. Very often, this area contains unmitigated orders, such as fair value gaps or order blocks. Price moves back into these zones to pick up smart money orders before continuing in the main direction. For now, just understand the logic. The details we will study later. So remember this clearly. Internal structure can move against the main trend, but external structure always controls the overall direction. This is why understanding both together gives you clarity, patience, and confidence when reading the market. As we discussed earlier, now, here is the key rule. If the market breaks the lower low, that is simply a continuation of the bearish trend. The external structure remains bearish, and a new external leg is formed in the same direction. But if the market is retracing, and during that internal movement, price breaks the confirmed lower high, that is no longer just internal structure. That is a structural break against the trend. This tells us that the bearish external structure is failing, and a new external structure is starting to form in the opposite direction. In simple words, breaking the low means continuation. Breaking the high means reversal. And this is exactly how we identify when a trend is continuing and when the external structure is actually changing. We really work hard to make this content simple and valuable for you, so please like the video and subscribe to our channel. It truly helps us and keeps us motivated to create more lessons like this. Thanks for watching, and see you in the next video.